we are very proud of the activity in Quebec right now in venture capital. For the next panel, we'll be also proud to present you a brand new fund that has been put in place in Quebec with Lumira Capital and with the partnership with Merck Frost, and especially under the umbrella of Terralis Capital. So we have two main funds for life science now that are looking for projects. So I'll let these gentlemen present you the funds right now. So I'll ask Mr. Bernier and his team to come on the front.
Good afternoon, everyone. It's a real pleasure to be with you, to be with great partners that I will introduce to you in a few minutes, and to be with one of our partners, which is Fonds Solidarité at Terralis and the Quebec government through Investissement Québec. Before starting, I would like to have a little bit of a view of who's in this room. So who are from Boston and who are from outside of Boston? So Boston first. Yeah, out of Boston, roughly half and half. Who's from life science and who's from IT? Life sciences? Great. Entrepreneurs? Investors? Angels? Okay, so we've got a great mix here around this table. Thanks. Normally we call this type of meeting a gathering around a campfire, but with the heat we've got today, it really feels like a campfire. First, I would like to introduce Daniel Etu from Lumira, the last fund that we just invested in recently, and our friend Reed Leonard from Merck. And what we'll start by saying is, as Alain mentioned a few minutes ago, Quebec is now the place in Canada, in fact, to start anything in life sciences. The report that came out from Ernst & Young this week that Alain was talking about mentioned that 50% of the investments done in Canada last year were done in life sciences, were done in Quebec. So for all of you, it's a quick drive, a couple of hours, and you've got a very, very good pool of talents. Now, we'll start by Danielle. Could you tell us a little bit about the history of Lumira, what Lumira is doing? And
certainly. So Lumira Capital, we've been in we're a venture capital firm focused exclusively on life sciences. We've been in the business for approximately the past 20 years. We're known several years ago under the name of MDS Capital. We've transitioned to an employee-owned firm. We've rebranded the firm. We're now Lumira Capital. And very happy to say, as has been mentioned, we closed on approximately $150 million of capital about 2 months ago in two funds. We're really happy to have Merck as a strategic investor, and actually an investor in our both funds, but really an anchor investor in the fund we called the Merck Lumira Biosciences Fund. And so those two funds allow us to invest throughout the continuum of the stages of development of compounds or drugs, therapeutics. As again, we have a focus, depending on the stage of opportunities, either focused on Quebec or focus on North America, Quebec, Canada, and the US, with respect to our later stage fund.
Thanks. Read a few words on Merck VC program in general.
Yep, okay, thanks. Appreciate the invitation to be on the panel. In November, December of 2010, we had gone to the CEO of Merck and received authorization to initiate early stage research-based venture capital activity. And this was the first time for Merck. We had traditionally stayed away from venture investing within the core business, right, related to therapeutics and product development. There had been in the past, there There was one venture fund which invested in research tools, Merck Capital Ventures. And then more recently, there was the launch of what's now a $250 million fund called Global Health Innovation Fund, running out of the Office of Strategy. And that venture fund invests only in healthcare adjacencies, such as at-home monitoring, back office, healthcare IT. They do no therapeutics investing, and they invest primarily at Series C or later for capital expansion. So somewhere along the line, I think with all of that activity, became time to revisit the question of whether we shouldn't reconsider our position about doing venture investing in our core business. And so that proposal was then received enthusiastically by the CEO, Ken Frazier. And so we set about then through 2011 setting up the design and implementation of our Research Ventures Fund. So we started, and we try to maintain, always asking ourselves the question strategically, why should Merck be involved in life science venture, right? What are we trying to achieve, both in general and specifically for ourselves? And so from the most fundamental perspective, in terms of what's in it for Merck specifically, we have to look at essentially a supply chain issue. It is undeniable that the future profitability of our business in pharmaceuticals depends on nurturing and harvesting innovation that's grown up in venture-backed companies. So our pipeline is full of molecules and programs that have been touched by, enabled, or simply acquired from biotech. And if you step back and say, given that reality, we had no influence whatsoever in any decisions that people were making about even what these companies would be, let alone how their programs are prosecuted. And essentially, we're leaving ourselves completely exposed to the preferences and insights of others. So from just that fundamental perspective, we knew we wanted to get involved somehow in the early stage life science community. And then we had to think about, so what's the best mechanism for us to do that? We made a decision that we're not trying to get into what I would say the venture business. We're not trying to create a venture capital business. And so if we think about strategic investing, meaning using investing for the strategic intent of furthering some other business objective, right? Then the decisions about how we'll behave and how we'll invest are different from if we say our business is to become a professional venture firm. So that's our overall mindset. So we decided that we should take a balanced approach of both direct minority equity investing and working with a series of strategic LP placements with a small number of geographically diverse life science venture funds. So what we did for most of 2011 has been, and through the middle of this year, has been to very carefully screen and select potential partners that we could form alliances that would essentially provide a vehicle where Merck scientific expertise could be made available to the general partners of some private early stage venture funds to help, if we, take our usual view of ourselves, right? We assume that there's something that we can lend to the process that will be helpful. That is part of it. And we are trying to influence the decisions that the general partners make in a sense that if we can help direct investors toward things that we think will satisfy a medical need, commercially viable way, that's part of it. But actually, just as importantly, is we need to socialize the scientific decision makers at a place like Merck to the quality and creativity that can come from science done in a small company so that we can, to some extent, get over this dilemma that we have where an early stage program comes to us, because I work out of licensing for the last 10 years, an early stage program comes to us from a biotech company, and our scientists look at it, say it's a late preclinical program, and it's almost like they're saying, I can't find anything wrong with this, but that's not the way we would have done it. And so at that point, you're asking a person to take a risk to recommend a transaction, or the alternative is we can say, so we should just wait till phase 2 when all of our theoretical concerns have been answered. And historically, Merck has been willing to wait and pay that premium. So this is partly what we're trying to solve. Roger Pomerantz, who's our overall global head of partnerships and acquisitions, also is my boss for the venture fund. We're trying to use this venture activity as a way to change that behavior. So what we would like to do is, by developing close contacts with the portfolio companies in our partner funds, make ourselves available for scientific consulting, reaching deep into Merck for subject matter experts, not just at the strategic level of, here's the cardiovascular therapeutic head, and what does he think about the future of congestive heart failure for something, but actually, here's a scientist that works in the formulation department, right, that has solved a problem about delayed gastric presentation of some drug, and instead of having to go out and hire a consultant who used to work at Merck, you can just talk to the person who works there now. So we're trying to bring value besides the money. And in a sense, the money then serves two purposes. The money that we put in as a limited partner. One is it creates the business purpose, right, the business objective, to allow our scientists to take on this consulting role. Otherwise, it's pro bono consulting, and that's not really appropriate to our shareholders, right? But the other is about putting money to work. So by investing in high-quality venture funds that have a history of doing company formation, early-stage therapeutics investing, we're actually trying to increase the pool of money that's available for new company starts. Because when we looked at the landscape of investing, obviously, as everyone knows, there was a migration, has been a migration of money away from new company formations, because the existing life science VCs, those that are still there, have to maintain the ability to protect their refinancing risk, and the syndicates have to hang together, and that's fine. So we feel that this combination of our ability to contribute scientifically and financially, this is the right space to do it. And then, so we have 5 of these partnerships that now we've set up, and Lumira is one of them. They're our Canada partner. We have another one that's disclosed here in Boston with Flagship Ventures. We have another on the West Coast that's not disclosed, and we've closed also an investment in Europe and in China, and those we'll both probably be talking about soon. And then for the starting probably first quarter, we'll start to seriously look into deploying some capital as a direct equity investment. And our strategy there is that we don't intend to lead rounds or price rounds. We want to be a co-investor, and we'll be looking for opportunities, again, where we can bring money but also some expertise. So it's a great experiment. In the worst case, we're taking the equivalent of one big licensing deal, right? $200 to $300 million. And we've done deals like this that have blown up a year later, right? And you have nothing to show for it. So worst case, we're going to take the same amount of money, spread it out over 10 years of activity, get close to and familiar with, and potentially help to enable and de-risk tens of investments. And if we can't capitalize on that proximity and do some business development, then really the fault lies with us.
Yeah, totally. I think you forgot to mention one of the criterias of your selection of funds, which are based on, what was it exactly? No baseball competitor teams from yours?
Yeah, so sometimes we get asked, so why Quebec and why not Toronto? And really, yeah, we did have a no competing baseball team clause. So.